Okay, let's go through what types of adjustments you can make to Q line if you're dialing in a particular instrument or time frame that you want to work for some automated setups in TradingView itself. If you use Pine Connector, you can talk the trade activity out to an MT4, MT5. Take the buy or bull and bear signals from the Q line indicator and have them ported out to any MT4, MT5 account. Now, for doing stuff in TradingView automated, do like a TradeAvate account or whatever you have linked to your TradingView, you can use third-party tools like what they call it, 3 comma, and there's a few others. We've been posting them up in the Discord room for all the QuantVue clientele. Now remember, TradingView does not inherently have, an automated system capability like we have an MT5 or CTrader or some of the other platforms, NinjaTrader. Now it doesn't mean you can't trade automated with it. You just have to use some of these third-party tools, and there are good, third-party tools out there to execute some trades. And I think that capability will keep building going forward. So let's take a look at this is the, if somebody's trading the NAS 100 or the Nasdaq, they're trading the MNQs, the NQs, or they're trading the NAS 100. This is my typical setup for working intraday futures trades. I'm on a 3 Renko chart, so that's the time frame. I'm on a 3 Renko chart. So my box size, every body on every one of my candles is 3 points in vertical distance. So Renkos have a consistency because the bodies, not the wicks, but the bodies are always 3 points. And I can adjust that higher or lower. So that's one beauty of Renkos is you can fine tune timeframes. So I have the best data possible. I'm on a premium subscription. So I have 1 second data that's building my 3 box size Renko charts bar by bar. Okay, so I can see that this is probably a little bit hyperactive for fully automated trading. So if I want to just go after and not miss a single one of the big structural moves, you can use days like today or days where there's a lot of chop and use them to slightly adjust your settings to minimize some of the in kind of the indifference in price where you're getting back and forth signals, but you're never missing the key structural trades and you're not really taking away a lot of profit from those. In the end, good trades run plenty of distance. So if you get in a candlestick or 2 or 3 later, who cares? You're still catching the predominance of the move. So today's a really good example, and I can see a lot of comments on people that are working towards automation, so I thought I'd bring this up. You can also tie in other indicators as filtering mechanisms, like a day like today, out of the open, we had a bit of a push. I thought this was a really good buy setup out of the open, and I'll show you why. We had this area base out between end of Friday trading into the overnight session. Look at that. No, I mean, you can't kind of get any better than that. So we held this area, then we lifted, pull back. Look at that. A beautiful W pattern leading up to a buy pre-market. And what have they been doing a lot of these days? As soon as the market opens, they just rip it and they take off. So that allowed you to get in a little bit early. That was the only buy I took all day. I would have taken this buy if I would have been paying attention, but I was super busy on so many programming projects, which I love. Like when stuff's getting really, really close to being done, I get all excited and spend a lot of time, making sure that everything's testing out good so it can be released. But anyhow, that was a good buy setup. And I like this right away after the open. We got a bit of a push above one of the kind of, the lower pivot highs on the way down from Friday trading. Let's just take a look at Friday's action. Remember Friday we had a sell day, and we peeked our head above it and rolled over. So I hit that for sure. And I thought, you never know, we might come back and retest the the lows of the overnight session and pre-market area. We did not. They grabbed it and lifted it, and then the rest of the day was a grind up day. I thought this was a really good buy setup. If we can't even come down and test this area support where they built, there was a lot of absorption. People that were trying to sell were getting absorbed by, there was a futures buying on every pullback and options buying. So it seemed like institutionals were actively absorbing anybody trying to sell. Obviously, if they're doing that and you get a little bit of pop and pullback and lift, and you're getting into that last couple hours of the day, what's likely that they're going to do? They're going to go run it up because why? We have some supply. We have a key level that was right overhead. And I thought very likely they're going to go up at a minimum and go grab that level or go test it. Let me just put a horizontal line. And sure enough, they ran that level and we had a level sweep and a beautiful sell setup right at the end of the day. So I thought that was a good buy setup, but I wasn't paying attention at the time. I thought that was a good setup. If you didn't get in there, you had a little bit of a pullback and lift right in here. You had a little bit of a lift in the money ball duel. Not a bad area for a good entry there from a money ball duel standpoint. You can see this whole time money ball on the trend bias setting holds, never dips down below the red area. That's pretty bullish. Just some very small little ticks down. Those are nothing. Those are like sneezes in a hurricane. It's, everything's screaming at you. Stay on the buy side. Bulls are in control. And, we had a little bit of back and forth there. And that's when that buying absorption of sell attempts. And the selling wasn't that heavy, so it didn't take much. And you can see, what did the market do? Pretty much we had the push. And you can see these patterns. A lot of this market stuff is about pattern. Stair step higher, stair step higher, stair step higher, stair step higher, stair step higher. And then what else did they do? They ran a beautiful trend line. You could have ran a trend line right there. They never let the market go below that level. I don't draw very straight lines with using my cursor, so let's go with an arrow tool. It's kind of appropriate. Actually, no, let me go with a regular line. There we go. Okay, so let me make a line so you can see, and I was kind of noticing this, that, at no point today after the open, they held, bounced, held, bounced, held, bounced, and so on. But that level sweep, that was a very clean textbook level sweep. They don't get any better than that, other than it was late in the day, so you don't know if you're going to get a lot of movement or not. And but I love level sweeps. It's one of my favorite trades. And that worked out, it worked out decent coming in the end of the day for, catching a little piece of additional price movement. Okay, let's clean off all these drawing tools and let's get into talking about making some adjustments so that your automation gets in enough trades each day, but you can start filtering out a bit of the noise. So one thing I can right away see that I could do to minimize, and some people might say this is curve fitting. I don't care. It works just fine. You got to have some way of filtering out areas of consolidation. And you don't have to make big adjustments. You can just fine tune a little bit and minimize some of these trades. Okay, so let's go in. I see one thing that I can do right away. I'm going to widen the Q line indicator a bit. So I'm going to go into the settings. I'm going to bump it to about a 1.4. Before I adjust these, I'll see what that does. Hey, look at that. I got rid of two signals. So that's not bad. That's two signals that are losing trades. And another really good rule of thumb, if you have an automated system, and I was going to mention this the other day and I completely forgot in a video, you have an automated system, there might be periods where unscheduled news comes out and the market starts getting whipsawy in a very tight range because the market's heard something, but it's trying to verify that. And what happens is the order book can go really thin. And when it's thin and the spread widens, the market can be chopping around waiting to zip up or zip down when the news is verified. So a lot of participants are getting out of the market, they're verifying what it is, and then the market will rip up or rip down. And I'm not talking about scheduled news. We already know that can happen for scheduled news releases. I'm talking about unscheduled, like, oh, there's smoke in the Capitol and everybody's running out of the building. There's fire engines. Now the market might start trending down, but the spread might start spreading apart because participants are getting out of the way until they verify and get a better idea of exactly what's going on. So, so having your system dialed back just a little bit will help in those scenarios. But what you should do is you should put a filter in your automation that says, hey, if I get in and have 3 losing trades in a row, make me authorize or basically put me on hold. You know, don't allow me to take any more trades that day. Then you literally have to go back in and reset your automation to turn it on and allow it to keep trading. That's not a bad idea because you might get a really bad chop day and you want to take 6 or 7 back and forth trades on a low time frame if some sort of odd thing. So just put a filter in there. Just say, hey, if I have 3 losers in a row, shut it down. You'll have to go back in and basically turn it back on. Or if you get 3 losers in a row, cut your position size way down. I wouldn't even do that. I would just say shut it off. Then you literally have to go back in and reauthorize it or allow it to take trades. That's a very smart thing. And that will handle any situation where the spread widens and the market gets weird because in futures the market makers might get out of the way as well as the prime participants. And major news releases, is it smart to trade through them? No, it's not. Because again, the spread can widen. You can get a whole bunch of false signals in a row. So, automated trading when you're doing intraday scalping has to be a bit hands-on. So if I'm trading automated on the Nasdaq, I'm not running this baby all day long. I have a certain time of day, I turn it on, probably like 7:33 a.m. Chicago time. That way any 7:30 news, I'm not coming on until 3 minutes after the news. It's plenty of time. You could go 7:35 and then I'm going to watch it. And if there's any major news releases during the day, I'm not going to have the automation on going through the news release. Because if it does that sideways garbage, well, the market's trying to figure out what the news really was. I don't want to be getting in and out, flip back and forth in a bunch of Q line trades. So I'll pause it, get through the news, minute and a half. I see we're starting to get some direction out of there. There's not a big gap in the spread anymore. Boom, turn it back on. Now this to me is a pretty good setting. So I'm on 3 Renko. I'm on the NAS 100. You could trade the NQs, MNQs. I think that's a pretty viable setting, and I didn't have to make a big adjustment. I'm not taking away gains on the trades that handle themselves. They take off and run. So, winner, we'll call that a slight winner. Here was a short that got out at a long. That was a loser. The long worked. Then you had a short and a long. We'll call it short a scratch, and the long worked. I mean, you had no problem today if you were automated out of the open making money. And all you had to do is fine tune a little bit. Now there's going to be some days, even though you've adjusted things a bit to minimize some of the trades and noise, you're going to have 1 or 2 days a month where you get in a hacksaw range. It happens. No big deal. What I do, if I get in a day where I end the day a little bit flatter, slightly positive, a lot of times the next day I'll slightly up my position size. And it just seems like when you leave a day of consolidation, the next day we actually get some movement. Okay, I'll hit this with a second video. We'll